Here are 4 standout stocks with impressive buyback programs that could be game changers for your investment portfolio. Let's dive in. Welcome back, guys. Today we are diving into one of the most exciting aspects of earnings season, and that is share buybacks, of course. We're going to take a look at 4 stocks today that are catching some attention with their buyback programs and what it could mean for investors that are watching today's video. But first, just quickly, can one of you explain, maybe for those who may not be as familiar, what is a share buyback and why do companies choose to implement them?
Thanks, Lacey. It's a great question. The answer is really right in the name, a share buyback or a stock buyback. A company buys back a certain percentage or a specific amount of the commonly available shares that are available for trading. And the theory is that supply and demand kicks in, supply of the shares goes down, there's fewer shares for retail investors to buy, therefore the value of each individual share increases in price. That's the theory behind it. That's why companies like to do it. It's also why some government regulators don't like it quite as much.
Right. Like he says, in theory, it's supposed to be that way. But some companies also use share-based compensation. They're paying their employees with shares. They use a buyback to offset that. So the shares they pay the company or they pay their employees dilutes the value of shareholder shares. So they buy them back, anti-dilutive. If those two things balance each other out, all well and good. There's no change. It's a little bit of balance sheet manipulation. But in some cases, you might issue a share repurchase program, get the headline in response to it, but really have your share-based compensation still diluting the value for shareholders.
All right, well, first up, we're taking a look at Apple. They announced a massive 110 billion share buyback program recently. Their buyback yield is 3.1%, and they also offer a dividend yield of 0.54%. How significant are these figures for long-term investors?
Well, the dividend yield to me isn't significant at all. Lacey, you've heard me say this about Apple for many times. They're a technology company that happens to pay a dividend. The dividend is really insignificant even for a long-term investor. It's just not that significant at this point. The share buyback was interesting. You could be a cynic and say that it was kind of curious that Apple chose to do a share buyback when it sits on all this cash. Why aren't they doing it to invest in other things? I think the AI story for Apple is coming. You've been seeing that reflected in the share price over the past month. I believe investors are getting behind that story. We're going to learn more at their developers conference in June. That could be a key catalyst for the stock. Right now, though, I wouldn't read too much into the share buyback, and I certainly wouldn't read too much into the dividend yield.
Want to keep your finger on the pulse of the market? Text the word YouTube to 68285. That's 68285, and get free breaking news alerts from MarketBeat for the stocks that matter most to you. Don't miss out on crucial updates. Stay informed and stay ahead. All right, let's take a look at Chevron now. Their 75 billion share buyback program is also quite substantial. How does the cyclical nature, though, of the oil industry influence their decision to initiate such buybacks?
Yeah, you're making a really good point there, Lacey. This is something that's very common in the oil sector because of the cyclical nature of it. Chevron's not a newcomer to share buybacks, and even the $75 billion number, that's not necessarily uncommon for them. The bigger story for Chevron, if you're a long investor, has to do with their acquisition of Hess, which is due for a shareholder vote by Hess shareholders. I believe it's early next week. And although that's still expected to go through, it's now supposed to be razor thin. It almost sounds like a episode of Succession now instead of what was supposed to be pretty much a easy merger going through.
All right, Thomas, let's get you in on this one. There's also Adobe, which I know you're interested in, who announced a $25 billion share buyback program to address its stock performance. How effective has this been in stabilizing the stock price for Adobe?
Well, right, I'll say yeah, maybe. And I want to say it's a little coincidental that they announced this buyback at the same quarter where they kind of gave some tepid results and tepid guidance. The market had really had a lot of expectation for AI for Adobe, not really playing through. So this buyback should help support the stock price, and it kind of is. But what happened after that release is the share price tanked to a new low. We are seeing some bottoming at this level, and we may get a rebound. The stock price is kind of in line with the low end of the analyst range, so there may be a floor in there. And I do want to point out that these share buybacks have been accretive to shareholders over time. In the last quarter, the average share count was down 0.8%. So we are more than offsetting share-based compensation. That is good for shareholders over time. You assume that the stock price, the stock's market cap is going to increase. There's fewer shares to divide into that market cap, so the shares should be worth more.
Looking for the golden ticket in 2024's unpredictable market? Thomas Hughes brings you the 10 best stocks to own in 2024. In a year where market corrections loom and sideways movement is expected, smart investments are key. Are you ready to outperform the market? Dive into the sectors and stocks primed for success. Don't wait. Start making informed decisions today, and your portfolio will thank you. Download the free report now. All right, well, last but not least, we're talking about Tractor Supply. They have been consistently buying back shares since 2007. What makes their buyback strategy unique compared to other retailers?
Yeah, but I wouldn't call it unique so much as aggressive. They buy back shares every quarter and every year, and they are accretive. In the last quarter, shares were down 2% average, and that's on top of a 2% reduction in the previous year. So technically speaking, share buybacks reduce shareholder equity because they're spending money on something that doesn't exist anymore if they retire the shares. But at the same time, the company is also growing, improving its market cap, reducing its share count. So shareholder value is actually increasing. The share repurchases more than double the yield. So I think that this is a good long-term play for income and equity investors.
All right. Well, thank you everyone for tuning in to our quick breakdown of the best stocks for share buybacks. Don't forget to head over to marketbeat.com to check out the latest stock buyback announcements. There's plenty more. I will go ahead and get that resource linked for you. As always, let us know if you have any questions about this or anything else on MarketBeat. Until next time, we'll be right back here for more. Thanks, guys.